Hi traders, welcome to Quick Tips for thinkorswim. I'm Connie Hill, Senior Manager Trading and Derivatives with Schwab. Today's quick tip is using and understanding the seasonality chart. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application, which is a fantastic educational tool. Come with me over to a chart of the S&P 500. And you can see it's just a basic candle chart we've got here for 1 year, and I've got a couple of moving averages on it. And this might be a typical chart for some people. Some might have a lot more detail in it. Well, what I would like to show you is how seasonality might impact looking at an index or looking at an individual stock. For example, if we have a pattern, say that's manifest in December, then we might see that happening over multiple Decembers and have an idea what to expect if the same thing happens the current December we're in. So let me show you how this might work. I'm going to come up here to Studies. That's not right. I'm going to come over to Style, and then I'm going to come down here to Chart Mode, and Standard is what has been selected, what you're probably typically used to seeing. I'm going to come down to here to Seasonality and select it. Now, as I choose Seasonality, things have changed here a little bit. So this graph up here, this nice little line chart, is mapping out what the S&P 500 has done year to date. Now, the date of this recording is July 7th, so this is what it has done year to date. Now, on the bottom, this red line is the seasonality. And what it's doing is it's taking the S&P 500 over the last 5 years, graphing what that average has been day to day. So let's look at this in a little bit of detail here. Let's start with current year to date. And this low point right here looks to be June 10th. So at June 10th, looks like we have a little bit of a running up, maybe to June 15th. And then typically there's been a little bit of a pullback, maybe 3/4 of the way back down to this low point here. And then beginning in, say, the end of June, first part of July, we get a little bit of a run up. Okay, so that's what's happened this year. Now, if we come down here and compare that to what the seasonality shows for the last 5 years, instead of having a rebound here, like what we're seeing on today's current year, actually seasonality over the last 5 years would say from that point on, it pretty much pulls back a little bit until it hits this low here that's on June 18th. Then after June 18th, it looks like it rebounds. And would you look at this? It looks like there's a really nice run going into the very beginning of July, kind of a little bit of sideways activity, and then running up again here to about, say, July 24th or so, before it starts to pull back again. All right, so that is what we might expect in a regular year, okay? The average of the last 5 years. Well, sometimes it might be helpful to encompass more data and more time than just the last 5 years. So what I'm going to do is come up here to my D for daily, and I am going to change this to a 20-year one-day chart. Now, 20 years is a long period of time, but it is pretty representative of our current trading and market environment. For example, you know how the market has gone, say, since 2006 to this year, 2026, is probably a little bit more representative of our current time frame and looking at those averages, as opposed to if I went back 50 years or 100 years. Our market's dramatically different than maybe how it was 100 years ago, so it might not make sense to go back quite that far. So we're going to select here on the 20-year. Again, up here at the top, we have what's happened year to date, and then down here on the bottom, we have that seasonality chart. But it's over a period of 20 years, and so it's really scrunched down. So what we're going to do, we're going to change how this chart looks. We're going to come over here from the auto, where it basically sets things up for us automatically, and I'm going to change it to manual. And then what I'm going to do is I'm going to come down here and I'm going to highlight just below the low of this red line. I'm clicking and dragging my mouse up. When I get to being on the top part, over here on the right as far as the highs, then I'm going to release it. Now that gives us a whole lot better definition than when it was all scrunched together. Now let's go back to our same time frame that we were analyzing. So let's come back here to June 10th, which on June 10th, remember our year to date, that's when it bounced. In this case, over the last 20 years, it looks like maybe June 10th was a little bit more of a peak, and then it dropped down. And then as of June 12th, started a little bit of a rally up, pulled back some, but kept most of the move. And then this is what's really quite interesting. Here's June 30th, and then beginning in July, look at this steep run up that the markets have had. Looks like it peaks here at about July 24th before having a little bit of retracement there. So this would say, all right, given the month of July, if we look at that longer expectation, we might expect a bullish July, although it's never guaranteed to be, and we're just basically looking at historical averages. Now you can use this seasonality chart with indexes like we've used here today. You can use it on individual stocks, you can use it on sectors, you can use it on whatever you want, and you'll be noticing that there is some seasonality as the market moves in and out of different sectors and so forth. So give it a try, go to your own charts, and go ahead and set that seasonality. When you're done with it, just come back to your style, come back to the chart mode, and then change it back to a standard chart.